Welcome to Money Mavericks, the podcast where we explore the dynamic world of finance, investment, and entrepreneurship.
I'm Kirk Drake.
And I'm Daryl Hicks. Together, we're here to bring you the latest insights, expert opinions from the trailblazers who are redefining success in the financial world. I think there's a lot to take away from that. If you understand you're really good at the 0 to 1 or 0 to 10, but find a really boring business or a boring industry and market, how can you bring your innovation and expertise into it? But I mean, food extraction, I guess if you've already got the manufacturing capacity and stuff like that, what do those opportunities even look like right now?
If I go back to Vitalis, which was that manufacturing business that I founded, we built a corporate venture capital arm. So that was a private company. There were 3 partners. We had no debt in the business, and it grew very, very quickly. So later we started to look at, okay, should we start financing our own equipment instead of selling it out to the banks? We bought an industrial solvent business. So we started to make investments up and down our own supply lines, right? So we bought a company that was making ethanol and isopropyl alcohol. So they had a cleaning division and a beverage division. So basically they made the vodka that goes into like canned vodka sodas. We bought 50% of that business and we brought them into industrial processing, which was everything we were doing in the Vitalis world. So we had the bank of customers who were already buying the thing. And then we just said, hey, do you want to buy it from us? And we had some huge growth in that. Then, the pandemic changed this mandate, but then everyone was making hand sanitizers. So people started calling us saying, I need 12 tankers of ethanol today. And you're like, whoa, this is nuts. So, like that diversification has served us well. So maybe part of the way my brain works of looking at all of these different things has served us well. But the corporate venture capital kind of mindset, if you will, of like, where's our expertise and where else could that be applied, that served us well.
What are the financial mechanics of that?
So basically in the CVC world, there's tons of ways to do this. The way we did it is we had a business that was cash flowing. It was a very healthy business. And it was like, hey, do we take these dividends out and just put them in some blue chip stocks over here? And we were like, let's do a little bit of that, but let's take some of this money and reinvest it into other businesses. That worked very well for us.
You did that through equity, not debt.
So we actually did that through a vehicle that we set up, which was very much like a fund. We funded our own.
You were
fund
your own
then,
LPs, like you were your own limited partners putting in the capital, or you had other external LPs as well?
We did not have any external LPs. And so I've worked with a lot of people who are setting up corporate venture capital or looking to set up, your family office is setting up a venture fund or something, and really just put a lot of structure around it. Because when we did this early, it was like, hey, bang, let's do this deal. Let's do that deal. Let's put some money over there. And I think we were lucky to have some wins. And we learned some, as Peter and I would say, we invested in our education on some of those deals.
Peter's an investor. He's one of the 3 LPs.
No, he's a mentor. And like I've had many hikes and long conversations, and we get into almost like forum-like conversations where you get to have talks about like, oh man, I really botched this one.
I was talking to a CEO yesterday who's, built multiple businesses. 2 of them he had sold were acquired, and the third one was an IPO. And we had a long, rich conversation about looking at the P&L and finding ways to take expenses and turn them into income, which is an idea I'm familiar with because that's, the reason why Amazon Web Services exists today is because when Bezos was looking at his P&L and saw how much he was spending on hosting, he's like, well, geez, we could do this. And if we need this, I bet you other people do as well. So why don't we? And now that's actually by far and away the largest revenue generator for all of the Amazon conglomerate. It sounds like you were doing a similar thing as well. Like when you had the manufacturing business, like here's what are our big expenses, or also what are the big expenses of our customers? And then we could build this other thing that now comes in, it solves a problem for ourselves and solves a problem for them. Did I catch that right?
Definitely. So looking at the solvent business, so our specialty was in supercritical CO2 extraction equipment. So using carbon dioxide as a solvent, supercritical, subcritical, so botanicals and flavorings and pharmaceuticals and colors and, a whole bunch of industries. So we design, weld, install, and service the equipment. And the other companies do the extractions, right?
Mm.
And that's Vitalis's core business. So high pressure equipment like that is very CapEx intensive, OpEx light. The alternative would be like a big washing machine that uses ethanol and then spins it out. And that's a cheaper machine, but then you're buying expensive solvent. And so we started making dual solvent machines and ethanol because it can turn into alcohol. You can put it in a vodka soda in a can. It's heavily taxed and heavily regulated. So when we went calling and saying, hey, we've built a machine that eats ethanol, do you want to sell ethanol to our customers? We had a really kind of lukewarm reception. And I was like, what am I missing? Like, we built a machine which is going to eat ethanol for its entire life. Our sales team will sell it. And then there's going to be a contract for the supply of this solvent. And I was like, what is going on? So then it was like, forget it. We'll do it ourselves. You know?
Spoken like a true entrepreneur.
What I always find with the best entrepreneurs is you hit that moment, you do the research, and you go, this is just stupid. For whatever reason, all these guys aren't paying attention and don't see the value. And then we're crazy enough to go, all right, give me 6 weeks, I'll figure it out.
And here's the thing, like Daryl knows this, and like I love food, I love wine, right?
Mm.
And I think people underestimate the like breaking bread with somebody, right? So where Dan, who's our partner on the solvent business, Dan was doing this. He was prepping Nutrigrain Spirit and selling it to beverage companies. And I said, Dan, let me buy you dinner because I want to like pick your brain a little bit here. And we're thinking of doing this on a much bigger scale in the industrial world, not in the liquor world. Liquor's yours. We're over here. But, you know, so a nice bottle of wine at a nice restaurant is number one, that's enjoyable for me. It's enjoyable for that person. It increases that relationship between us. And I learned a ton. And the number of times that people go, we should do this together. And Dan said, like, hey, you guys put the capital in and I'll come and do that for you. I already know how to do it. And I was like,
Mm.
perfect, let's do it. And it doesn't always turn out into a deal. Sometimes it's just like a great memory, some learnings, and a good meal and a good bottle of wine. That's a win in my book too.
Yeah, exactly. I think that's going to be like, the theme for this podcast episode is like, forget it, I'll just do it myself.
Yeah. Yeah, with the celebration and balloons. Yeah.
Yeah, there you go. Exactly. This has been an awesome conversation, Joel. I always love hanging out with you and the energy and the vibe with the founders. You've had a lot of experience both on raising capital and on deploying capital, right? We talked a little bit about the deploying of capital, and you started out kind of shooting from the hip with the corporate VC and just any kind of deal that looked good. And now you've said, okay, after a couple things that kind of blew up and didn't work, fortunately, more wins than losses, like you said, but a lot more rigor to it now. But I know you've also got a lot of experience on the raising side. I'd love to kind of just for you to unpack that a little bit, because obviously fintech executives, if they've got a really good idea, you talked about cash flow, super, super valuable point, right? Cash flow
Yep.
can overcome inefficiencies in the wings of the airplane and kind of just power it through, take a good enough idea and push it over the hump to make it successful. And so, maybe a little bit of some of the wisdom that you've got or the experience that you've had around the raising capital side would be great.
Having good relationships, and I guess this is sort of part of the trend as well. Like, when you've made money for people in the past or made money with people in the past, there's that level of trust, right? We are good communicators. We don't like bury our heads in the sand if things aren't going well. We deal with it head on and we say, hey, sales are slower than we need and we want your help. We don't hide any of those facts. And I think that's been good for our reputation. And when I say our reputation, traditionally we're coming in and there are other funds coming with me, right? So it's my cash that goes in, but we don't have LPs anymore. I had that in 4 funds where I was the GP and I had LPs. I'm lucky to be at a point now where I live and die by my own decisions. It's my capital at risk and my capital when it wins. So that's a bit of a different dynamic. But I guess I would say that we've had success in raising because we have an expertise and we are going to slow down and articulate it or explain it when people have questions. Too often when people are raising, it's like, well, you got to just get this and you saw it in our spreadsheet and look at the growth, it's going this way. So you either get it or you don't. When people come at it from that side in an industry I don't get, it makes me close my wallet up pretty quick.
Yeah, there's definitely something there. I was talking to an investment banker the other day who's done a bunch of IPOs over the course of his career. And I asked him a question about what makes a good public CEO. What do you
Ooh,
look for when you see a founder entrepreneur and you say, this guy is going to be a great public CEO? And so
got it.
much of his answers was very, very, I didn't get the answer that I expected, but I just want to build on what you just shared there because where he came
Yeah.
out is he said, beyond the obvious industry expertise, it's like, are they authentic? Are they sincere? Are they high integrity? Let themselves not be manipulated by the capital markets or other so-called experts and stay true to themselves and their values. And I hear a lot of that in what you were just sharing as well, like in the communication with your investors.
Yeah. So the public markets are a totally different beast, right? And usually when we've had exposure in the public markets, we have taken something we built public, right? We've done that 4 times. We have a pharmaceutical drug development company which extracts and isolates pharmaceutical compounds. It's one of the leaders in the world called Filament Health. One of the conversations we had very early in that deal is like going public is a totally different beast. You now have two very distinct jobs, right? You have to run the company, execute on your business plan, manage your cash, like do all of the things you would have to do if you were the CEO of the company. You have to do those things. And then you also have another full-time job, which is managing the story, the public perception, your investor sentiment. And if you fail on either of those, you fail, right? If you fail on both, you fail. So it really is that balancing act. So in the public market CEO world, you do need somebody with a little charisma, somebody who's going to not be afraid to travel and do the road shows. It's a huge distraction to be a public company and it's a huge expense. There's big opportunities to it, but there's monster costs in time and cash.
Would you ever do it?
I'd be a horrible one. I'm not the metronome of consistency in our businesses. If we've got a problem to solve, drop me in for a sprint. There's probably no one better to solve it. And then I get out of the way.
Yeah, like a maverick. Yeah.
Yeah. Yeah.
No, and it's true. One of the things that's really come through in this conversation too is know thyself, which is one of the
Yeah.
hardest things out there, right? And give yourself permission to be yourself once you know yourself as well. Try and staying in your lane and your zone of expertise, your zone of genius, so to speak, right?
Yeah.
I think is important. The CEOs of a CEO of a publicly traded company needs a little bit of charisma. I would say that's important for any CEO of any business because relationships at the end of the day, high integrity, transparency, all those things that you were talking about, charisma kind of falls into that bucket as well in managing those relationships, I
Yeah.
would say.
I guess I should put the caveat on there. If you ever see my name as a public CEO in one of our companies, it will certainly have the word intern in front of it. If you drop me in and I'm needed for a period of time, I'm basically riding the ship, going through a growth spurt, or like I'm looking for the full-time guy to replace me. The quicker I can find someone better than me and get out of their way, then I'm doing my job well.
Yeah, you're
Right?
You're Mr. Wolf from Pulp Fiction, right? The cleaner. I'll be
Yeah.
there.
Yeah.
It's a 29-minute drive. I'll be there in 27 minutes.
Well, like what I like to say is I want to be the dumbest guy at the table. I just want to own the table or a piece of it. I want it to be my table, but I want to be the dumbest guy there.
Amen to that.
On Money Mavericks, we don't just talk about making money. We explore the innovative strategies and bold decisions that drive real change. Whether you're an experienced investor, a budding entrepreneur, or just someone looking to make smarter financial choices, we've got something for you.
Every week, we're going to sit down with industry leaders, visionaries, and mavericks who share their journeys, challenges, and breakthroughs, from contrarian views on market trends to the secrets behind building a successful startup. You get an inside look at what it takes to thrive in today's economy.
And we promise to keep it real, engaging, and most importantly, actionable. No jargon, no fluff. Just straightforward conversations that you can apply to your own financial journey.
So get ready to challenge your thinking, expand your knowledge, and take control of your financial future. This is Money Mavericks.
Where we turn financial dreams into realities and mavericks into legends.
I don't know how much you're following some of the AI stuff, but in the fintech world, so Klarna just announced they have this new AI kind of bot on the front end that eliminated 700 jobs, 25% first call resolution, better than a human, 40 million to the bottom line every year. How are you thinking about AI in your businesses and pushing people to not get left behind, or are you just ignoring it?
No, definitely not ignoring it, because I think if you ignore it, even if you're moving on the tracks, not moving fast enough, you're going to get run over. So we definitely are, I'm not going to be programming any AIs soon. When we need that done in our businesses, I'm the dumbest guy at that table by a large margin. But yeah, it's certainly, when we look at customer service or like in a lot of our technical investments or the technical documentation, there's a lot of research, and we have high paid people reading a ton of white papers. So the way we're looking at it is like, instead of reading 100 white papers to see where we need to go with something, like have an AI do a scrape and then tell me the 3 best options. And so that's how we're kind of looking at it within our businesses. And then certainly a lot of the tools on the customer service side, a lot of the tools in our business assessments to go into a new market and go to ChatGPT and say, what do I need to think about here? Or who are the biggest players there? Or, it's information gathering, I think, is hugely powerful one.
I've seen that in a few different businesses as well. I think people that are using it really, really well is like massive amount of information needs to be distilled down. Tell me where I need to take my very precious human capital resources and focus them. So interesting that that's a place where you've already found some value.
For ChatGPT, that is, you have to work a lot harder. And when you get into the specialty things like math, science, finance, it definitely, I'm not trusting the amortization table coming out of it. But there's another 19,000 models that you can download that are perfectly trained and usable in those contexts, where we've seen it be able to digest a credit unit balance sheet and compare credit unit A to credit unit B and give you a pretty solid, non-hallucinogenic analysis from a due diligence perspective that says, hey, do you want to buy loans from credit unit A or credit unit B, or do you want to, what's the financial health of this thing, in a really interesting way, right? But not using ChatGPT. It's going one step further and saying, okay, ChatGPT is going to have a lot of success because they're building a business ecosystem around it. Don't get me wrong. And I'm using it in a ton of key ways there. But I think in the specialty boutique where you have these niche things, right, there's going to be another layer that you have to go down and figure out and play with to be able to really get it to do and give you the skill sets that you need until ChatGPT goes and ingests that functional component into it, right?
I guess if I were to summarize our thoughts on AI, it's like, I think this is the next pivot in business, like the internet. It doesn't matter if you're a manufacturing business or an industrial solvent company or a tech startup, like everyone is going to use these tools in their business in order to compete well.
Well, and even the context of, could you have one person manufacture, unicorn, where you've written the code, you've done the math, you've run the financial planning, all that kind of stuff using a set of AI models, and you got one guy doing it, run the whole thing.
100%, right? And, you get into some really technical areas where it's going to help. This design in that jurisdiction, tell me where we might need to make some adjustments. I mean, so many use cases and so many things I'd love it to help us with that I may not know if it's there yet, but it's coming fast.
Yeah. I've been amazed. I probably have 4 hours a day that it is making me either be able to solve something I didn't know how to solve before, or B, making my solution 2 or 3x better before I talk about it with my team. I mean, even just in that CEO, visionary, communicative role, to be able to take this jumble of thoughts that would have taken me 3 or 6 months to digest, make pretty, put a chart around, etc. Instead, to sit there in an afternoon and be able to revise it 4 times and spit out, something like is fantastic, right? It's the other side of that, which probably just a continuation of that, is then Rocket Mortgage, which I had been thinking about, just the mortgage application or any loan application process of like this whole self-service. Let me fill out the form in the exact format that you want me to do, whether healthcare, fintech, whatever, and going, Okay, the reality is I've got a tax return. Why can't I just upload the tax return and then
Oh,
you fricking fill out the damn form, right? Like, what is this nonsense of me doing data entry to save you time? Another good example of this that I always think of is we've spent all this time on UX on mobile apps, right? Trying to optimize how to order a hamburger at McDonald's. And the reality is I'll have a quarter pounder with cheese, no special sauce with French fries and a Diet Coke is way more efficient than any mobile app is ever going to be, right?
yeah.
And we're going to have this generational piece if we've done everything to put things into some digital, non-analog format. And then it turns out that that digital format actually makes no sense.
The interesting side of AI, there's a lot of conversation around like, oh, how many jobs it's going to displace. I can tell you right now, filling some of those like general labor positions
Yeah.
is very, very difficult in some North American markets
Right.
right now. Like people don't want to do it.
Right.
So, it is almost like a necessity in some markets and an opportunity in others. But the idea of where this is going to disrupt some of those markets,
How would you want to see it change banking?
don't get me started on this. Like Mercury in the US has some really amazing tools. Like you can drag in an invoice and then it scrapes out the wire details and says, looks like you need to pay this. And it preps the wire for you and does all these things. Like in the easiest ways, if I can spend less time on stupid stuff in the banking world, and if anyone asks me to fax something, which still happens in some banks, I just want to throw my computer across the room.
Right.
Like it's so crazy to me where you have some groups that are hugely innovative and other groups that are still like, can you send that, via Telegram, please?
It's like, yeah, I lost the keys to my DeLorean, so I can't make it back to 1985 to find my
Yeah,
fax
yeah,
machine. Sorry.
yeah. I'm short some banana peels to fuel this thing. Yeah. So I think like just kind of table stakes, I think everyone should take those really old archaic processes and remove them from banking. And then I
Mm.
think there's a lot of opportunities. You know what I'd love to see is someone who could create a matrix on like, I have this kind of deal. What bank likes that? Right? Like a winery side. Like I know this because I'm a big
Right.
wine guy and I have some friends in that industry. And so I knew that Silicon Valley Bank was there. But if you were net new into that industry, you're
You have no
probably
idea.
not calling Silicon Valley Bank to finance your winery, but they
No.
are a force in that world.
I'm just thinking
Right.
like when you're doing your tax ID numbers and you have to pick whatever industry you're in. I'm sure on the reverse side, the banks know what industries they're lending to. And you just got to mash up these two sets of data and say, based on your industry code, here's the experts in that industry
Yeah.
you should be talking to, right? Like, I don't know, it's all in real time.
One of the guests that we're having on the podcast coming up soon is one of the savviest underwriters that I've ever come across in my life. And I'm looking forward to having a really rich conversation around underwriting and the art of underwriting and why we have so many different banks that are specialized or so many different merchant processors that are specialized. And I think that that was a really important takeaway from this conversation. I think so many founders, when they're first getting out and starting a business, just think, well, I'm just going to go to my bank and I'm going to ask for financing for X, Y, or Z. When actually there's so much more, they tend to be much more generalists, and you have specialists in every market. We're so fortunate to live in a part of the world that has these incredibly robust capital markets that if you just know where to go and where to find the right
Yeah.
people, you can talk to someone that's going to ask you all the intelligent questions and really understand your business and be willing to take the risk on it that somebody else won't. Because when underwriters don't understand something, the answer is almost always automatically no, right? They
Yeah.
have to be able to really understand the nuances of it deeply. And so we just kind of glossed over that really quickly in the early part of the conversation. It's like, well, yeah, of course, not all banks, you have to talk to this bank for this, you talk to that bank for that. I think that that was a great takeaway. Then this idea of how AI actually comes in and it can and kind of do the indexing and help you know where you should go chase, what relationships you should be following is awesome. Somebody needs to build that.
For sure. And I think, you go back to non-AI skill sets of like relationships and storytelling. If your banker likes you and gets your business, that helps things, right?
Mm-hmm.
And, like that's something I'm very excited for AI to disrupt. is when I get a copy paste of some contract that the lawyer has done 100 times and a bill for, the couple hours of their time, you're like, I don't think this was a couple hours of your time. Maybe you write it.
Right.
Mhm.
You missed this where it says someone else's company in here. So I think
I,
the legal world is being disrupted, but not something we're playing in, but something I'm excited to see.
I have an absolutely phenomenal specialist lawyer for venture capital deals and private equity deals, right? One of my businesses is venture backed. So, really important to me that I find that specialist. And this guy is invaluable to me, invaluable. But we can't use him for all the rank and file sort of rote stuff. And nor is that a good use of his time either, right? So we have this generalist legal firm that takes care of a lot of that stuff. But I would really love it if everything was kind of in his purview, or at least had an understanding. So if he had the ability to have these like AI bots kind of like banging out all the rank and file sort of general stuff, and then I can just have him at the absolutely eye-watering hourly rate that he charges me, but he's worth every penny because he's so good to advise me on the really important stuff, that would be an amazing solution to have. So I don't think that he should view that as a negative, that, oh, it's going to cannibalize a whole bunch of my hours. No, it's actually going to embed him more deeply into the relationships he already has. Anyway, this was an amazing conversation. It was a heck of a lot of fun. Want to be respectful of your time too, Joel. I know you got 1,000 things going on today, but I really appreciate you taking the better part of an hour to kind of chat with us and geek out on this stuff. I feel like when we get, a few dozen episodes deep, we'll have to have you come back and talk about certainly this amazing project that you're working on, which I can't wait to see come to light. But there's so much more we could have get into. But thank you so much, buddy.
Happy to, I guess, we covered a ton of ground, and I think we just touched the surface on so many things. So yeah, maybe if we want to dive in deeper on any of those, always around.
We'll do it. Love it. Thanks, buddy.
Thanks for tuning into this episode of Money Mavericks. We hope you found it insightful and inspiring.
Don't forget to subscribe, like, and leave a review on your favorite podcast platform. And be sure to share this episode with someone who needs to hear it.
Stay connected with us on social media and visit our website for exclusive resources, episode transcripts, and more.
Until next time, keep pushing the boundaries, making smart moves, and turning your financial dreams into realities.
You've been listening to Money Mavericks, where Mavericks become legends.